The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to a very special edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends? Don't hear anything. Oh, okay. They're not Johnny on the spot today. Are they there? No, there it is. Okay, so what do we have? Well, the FOMC just came out with the last Janet Yellen announcement. I guess she wasn't yelling. We're up about 6.5 points on the S&P cash. What we're really waiting for now, we hurried up and waited for the FOMC meeting. This is out of the way. So what's the next thing we're going to be waiting for? Well, it's going to be earnings after the bell tonight. And, of course, we've got Facebook, Microsoft. Microsoft was doing very good earlier in the day. I haven't looked at it lately. PayPal, AT&T, United States Steel. Oh, boy, we're going to have to play that tomorrow. Qualcomm, eBay, MKS, Instruments, a handful of other stuff. So we got a lot of earnings coming up after the bell. Yep. Amazon on Thursday, Apple tomorrow, Google. And I think most of these folks that own funds, they don't need to go out there blazing a new trail. They're much more willing to buy a stock as it goes up than bet on whether it goes up and down. So we'll probably see a lot of action, a lot of volume from fund buying here in the next day or so. So don't be surprised to see this continue on until Monday. But they'll be putting their money somewhere. Is it going to be in infrastructure? Is it going to be in tech? Is it going to be in something else? And this time of year, mostly about sector rotation. So could we see kind of some midterm or short-term tops and things like technology? I think the answer is certainly yes, short to middle. And that's about it. So what do we need to really look at from what the Fed said just a few minutes ago? Well, the fear, it was the show, The Fear of the Walking Dead. It came after The Walking Dead. But the fear of an inverted yield curve is what I think is on the tips of most bond traders out there. I'm not a big bond guy, but I do read what they say. And it seems to me like they're all thinking that the 10-year hits 3% before the 30-year does, and what the effects of that would be. But, you'll have to see. But, you want to keep your eye, even if you're not a bond trader, on this TLT. My belief from looking at all the charts out here is the TLT says it wants to go to 116, and I'm thinking that maybe in the next couple of weeks, maybe more buying from the government. And a handful of other things going on around here may change a lot of what we're going to see this year in trading. But a lot of huge wins in these stocks. And, of course, you don't get to do it. You don't get to crow about making a lot of money unless you sell. And I think a handful of these, a lot of hedge funds probably thinking, you know what, we've got a lot of money. Let's go ahead and ring the register a little bit on some of these things. Look at other sectors that may do well. And again, the idea of shorting monopolies doesn't seem to be panning out. Boeing is up almost $18, which is about 5%. And a handful of other things, but we'll look at all of this today. We'll see how this comes out. Kind of flat on the dollar, 89-ish. And again, it's going to be a lot more about earnings tonight. If we make it through tonight, I think, and tomorrow, then we're going to see that money start sloshing back in. And if you're thinking about shorting, I suspect that next week is when we have to start worrying about the possibility and probably the probability of another government shutdown. If you watched the State of the Union last night, man, no one could, there was a lot of good stuff. No one could say anything good about it. And that makes me think that there's going to be more blood spilled. What was the name of that movie? There Will Be Blood. Makes me think that there at some point, we're going to see probably some unwise action politically, and probably next week. Long term, it probably will be good. Kind of like Godfather, where they said, every once in a while we got to, go to the mattresses, get it all ironed out. It's good. Gets things cleaned out. Well, unfortunately, I think the time when Sonny gets it at the toll booth is probably coming in the next week politically for a handful of people that were leaders in the swamp. And we're going to find out about that probably, and it may be enough to kind of push it off. But I don't see any kind of kumbaya coming. And in fact, I see kind of one of the only levers that somebody can pull is burn the entire thing down. And that may happen next week. And I think the market, even though no one's really talking about it openly, I am the first. I am talking about a potential government shutdown come February 8th or 9th in that time frame. Yep, just doesn't seem very wise, but hasn't stopped anybody in politics before. They've always done stuff. I just keep, the interesting stuff I watched this morning. I went out and saw Finest Hour last night. And I got to say, great movie, but not a lot of people willing to stand up and yell and be wrong for 5 or 6 years until they're right. And really, if you go back and read the history of Winston Churchill, he went over and saw instantly in 1933 what was happening in Germany, came back, witnessed it, told everybody about it, and no one in the world, in his world, would do a thing about it. In fact, into 1939, you had apologists. Today they'd call them leading from behind kind of yahoos that were just weak and ineffectual. And eventually that bites you on the rear end. And that's generally what makes, when it all hits the fan, is generally what makes great leaders. They aren't kind of made as far as events make them. But very good movie. You got to go see it. Well, I'm just thinking that, we've had a pretty big move in the dollar. It's going to probably bounce a few times. It may not even do anything but go sideways here, but you never know. Anyway, when we come back, we'll do a little bit of history, one of my favorite subjects. Then we'll get into some charts. And, as far as I'm concerned, I'm kind of sitting on my hands, added some positions yesterday. I like them, and we'll see how those do in the weeks to come. I'm not trading for the next day or half hour. I think I've got some good positions that are based on long-term trends. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then it's all just a little bit of history repeating.
On this day in 1950, did I get that right? Yeah, in 1950, U.S. President Harry S. Truman publicly announces his decision to support the development of the hydrogen bomb, a weapon theorized to be hundreds of times more powerful than the atomic bombs dropped on Japan during World War II. Of course, this is a response in the year prior to the Russians blowing up their... now my... Yeah, I don't know what's going on here today. Okay. Nope. There we go. What's going on here? Okay, that's right. Okay. Okay. That should be going good here, shouldn't it? There we go. In 1950, U.S. President Truman publicly announces his decision to support the development of the hydrogen bomb. And of course, one of the I call them the inventors of the atomic bomb, and another man named, I think his name was Euler. He was a mathematician, had figured out just about everything they needed to know about the hydrogen bomb and figured out that why splitting atoms apart had a decent amount of energy in it, actually combining them was incredibly more. And, that 100 times, it's going to really be more like about 1,000 times more powerful for a hydrogen bomb. And what's kind of interesting is how simple the designs have actually gotten and so small. These things were 8 and 7 tons in I think they blew up the first one in 1952. It was actually 78 tons. They called it an installation on the little island that they blew up, and it disappeared. They didn't know a lot about how this stuff work. There's not easy ways to test it. They knew it would work. Unfortunately, that first experiment had a problem, and that is because it was 3 times bigger than they expected, it blew away a lot of the cameras and test apparatus that was supposed to find out about it. Used liquid deuterium, which is a isotope of hydrogen, and kept it at I don't know what it was, 150 Celsius below zero. And but now I've held one in my hand, at least not with anything in it that would go boom. But it's amazing how small these things can actually get. And I think the one that I held was 8 inches around and would have been worth about 50 tons of TNT. The thing was 2 feet long and 6 or 8 inches in diameter. So hardly anything. And just amazing how small these things actually, frightening how small these things can actually get. To make a hydrogen bomb, you actually have to have an atomic bomb go off, and the photons, actually the X-ray of the original atomic bomb, sets off a rod of plutonium separated and surrounded by lithium and some other neat stuff that actually turns to hydrogen, and that's where you get your hydrogen. What is it? Lithium dioxide. Yeah, lithium dioxide, I think. And then it's surrounded again by uranium 238, which is not normally fissionable, but you can actually just continue to add additional things like hooking another train car to the end of it and make them bigger and bigger. Of course, that led to the biggest explosion of all time, with the Russians exploding one with 50 megatons. There is no theoretical limit to adding these additional segments called stages in it. And all you need is one small atomic bomb to set off the larger hydrogen bomb. But now the scary part is out there. But a lot of interesting stuff out there. One of the big advances also in this was a neutron generator, which maybe it still is, made down here in Clearwater, that throws a lot of neutrons in there to make sure that the thing goes bang. Maybe somebody around here in Clearwater is listening to the show, and we'll phone in one day and talk about it. But the company is not too far, stone's throw away from where I live, and that's what they need, neutron generators. I'll probably get the neutron dance out of there. Anyway, in 1950, something scary came this way, but a huge advancement. Eventually, hydrogen power will probably run the entire world for generations. Thousands and thousands and tens of thousands of years to go, and probably in the next 20 years they'll figure out how to do it and make electricity for a penny a kilowatt. So that's it. Suitcases, anyone? They've had those since the 80s. The one that actually blew my mind was a thing that was a atomic bomb that literally wasn't much bigger than a hand grenade, and they finally figured out no one could throw it far enough to get away. Then they made one on a rocket, kind of like a bazooka. Same thing. They figured out no one could get far enough away from it, no matter how good the bazooka was. Then they put one in a mortar and a cannon, and finally they had to get one that would shoot it 20 miles away to make sure that it didn't kill the people that fired it. But very interesting technology, and when you see how it's done, you go, my God, anybody could do it. Thank God no one can get their hands, or very few people can get their hands on both plutonium and on uranium-235, which starts the whole thing. But it's amazing what they've done and how well they've engineered these things over the last 100 years. My mom actually worked in the Bendix plant where they put a lot of this stuff together. and never could talk to me about it, but I saw enough stuff in the newspaper that I knew exactly what she was doing over there at the plant. On this day in 1950, that all started. So what else do we have? Let's go ahead and start looking at some charts. You can give me a ring at 877-927-6648. Had a lot of good subjects out in the last few days, so we'll continue to keep an eye on that. One of the things someone was mentioning earlier in the day was the weakness in natural gas. Natural gas has broken $3. We talked a great deal in the fall. When was it? Just before I left on vacation, and the just how bad natural gas was doing. You know, generally when something like natural gas isn't performing well, there's other people on the other side of the equation that will do well. Aluminum manufacturers, because of course they're probably using power from either hydro dams and or natural gas for electricity. So what if you looked at some of these out here in the natural gas LNG part? If natural gas is cheap, LNG then also probably good business to be in. We'll talk about this next.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, we were talking about natural gas. If natural gas is not expensive, and of course, by March, if it's cheap now, you're going to love it come come spring. And, as long as crude can stay in the 60s, you're probably going to have more and more mines until that price breaks. Right now, they continue to flare a lot of natural gas. It is problematic to think that natural gas will get real expensive probably before August of this year now. You're kind of on the downslope of all of it and on the upslope of more and more rigs, which mostly put off a lot of natural gas as a byproduct. Again, especially in the Northwest, they're just flaring it off to the ability that the states will allow them that you can get waivers. They just burn it. They can't even find places to put it. So, natural gas, is it going to be a big deal? I think it can be, but as long as it remains fairly inexpensive, turning it into LNG becomes very attractive, and especially with all these new shipping companies that were out there. I talked about that in, early December. GLOG is one of those G-logs. This one was about November. I was talking about this thing, I think, around the 1st of December, where this thing, maybe a couple of days when I started seeing it move higher. I was going on vacation, so I didn't play it. This thing has just kind of come back and done a 50% retrace. I'd keep a kind of close eye on something like this for a while. And, you're probably going to find support around these levels. Now, is it a huge winner? 10, 20% maybe to the upside. So, again, I'm looking for much more home run kind of pitches down the center of the plate. But you know what? If you're into playing natural gas, I think this is much more a winner than maybe trying to hope that we get a little bit more cold weather before the end of the end of fall, Christmas, winter. That's what it is, isn't it? And we look at it. Anyway, there's a whole bunch of them out there, not just G-Log. So you might want to keep a look on those liquid gas ones. G-Log seemed to be the best one of the bunch when I was looking in December. I haven't really looked at many other ones. TGP, this one kind of did the same thing. Now it's back to support levels. So that may be it. This is TK LNG Partners. Anything with a partner in it scares me. Navigator Holdings actually popped fairly nicely today. That's NVGS. HMLP, this one looks like a weak sister to me. So next, GMLP, which is Golar LNG Partners, has come back to its gap. So that could look attractive out here. Light volume, this thing gapped up on the 18th of December, did so with 1 million shares. Yesterday, you had 275,000 shares, 145,000 shares today. So that one would also look interesting to me. And the risk reward probably better than taking a swing at natural gas these days. Okay. So what else do we have? Oh, going to look at some other stuff. Again, you can email me at path@tfnn.com. Show listeners, in BB, what's your take on this stock? Bob from Colorado. Thanks, Bob, from telling me where you're from. Is it BB? What is BB? Oh, BlackBerry? Oh, I forgot they changed their ticker. BlackBerry Limited. I have no interest in going long BlackBerry. I suspect that they're just like Sears. Eventually going to wake up and they're going to be bankrupt. 50% perpetual short interest. Can you play this intraday? I think you can. Does the chart look horrible here? No. But these stocks that are literally intellectual property bankrupt are problematic. The second thing that I've always talked about is this Canadian tech companies. There's a thing in the tech world called the Canadian discount, the Canuck discount on technology, and that's generally a problem I had with our company, which we were based out of Markham in Toronto. And you just can't get the value out of your company because as soon as you get good people and you train them and they get smart, they get paid 4 times more to go to California. So this is always a problem. And now BlackBerry can't pay people up. And perpetually, if anybody learns anything, they get poached. There's not a big future in BlackBerry. I haven't heard anybody tell me what's going to change. They just keep moving things on the deck chair as the Titanic goes down. But that's no different than Sears or Radio Shack. These things can take years to go lower. I just think that there's much better things to do out there. You can't short it, and you really can't go long the thing. Just next. There's a saying on Wall Street that's called change the name. I would just take it off your screen and hide from it, lest it kind of bring you in to the rocks like the sirens of those tales. What was it? Homer? Yeah, Homer. So that would be it. Okay, now we're going to go and look at Kroger. Kroger getting a bounce today, talking about using new scanning technology so people can just run through the express lines. Says that they will actively go and compete with Amazon. I guess the last couple of days was fairly strong. It's kind of coming back here. It went up against previous highs with the same volume. I don't know what you're trying to do, whether you're trying to go short these things or not. This one had, let's do this, try to get this out. This one, your volume's okay up here at the highs. The energy did kind of fall off from 25.20, which is the December 1st low. I just don't know. I want to see something I can make 20, 30% on, because a lot of times I'm going to have to settle for 15. And if I tried for 15 and all I got was 7, I'm kind of spending a lot of my time on things that could never hit home runs. I want somebody that can at least get a double or a triple, even if they're a big home run hitter. And I just don't see it in this. It's a good business if you want to park money, if you want to make money. Just I've never seen, this thing's taken forever to go from $26 to $30. And when you're in stocks like this that don't have a lot of upside potential, there's always the idea that maybe you have this huge downside potential like you got back here last year in June when all that kind of stuff started hitting. This thing went from $30 in 2 days to $20. So I'm just not a fan of getting into these. Let me put it 2 ways. In fact, let's talk about this when we come back, because I do like the line of stuff I'm talking about now. But it is higher interest rates and low margins, the curse of a market going forward. So we'll talk about that when we come back. We'll look at BSH also. You can email at path@tfnn.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're flat on the S&P now and kind of rolling down a little bit. Everybody, still up 70 points on the Dow, up 5 on the 8 on the NASDAQ. So we'll have a little. What I was going to say is we're in a rising interest rate environment. And what you don't want in interest rate higher environments is low margin. Because as expenses go higher and inflation goes higher and borrowing money goes higher, the most effective are the people that make the least. And if you're working on a 4 or 5% profit margin like Kroger, that is problematic. Same thing with Amazon. If expenses go higher, Amazon theoretically would be worth less. These guys have already gone to the well 100 times, though, in the bond market and have lots of cash. So those guys are it. Kroger, I don't think, if we went and looked at it, probably is not sitting on $50 billion or $100 billion that they could get any time they want if things turn south. And that's why I'm not a big fan right now of going after these low-margin businesses. If anything turns south, these things are widowmakers in the fact that they can turn down on you. And again, if you want to go short, say you make $5 on a $30 stock, I've got to see this thing's going to go to 20. I want to see something like a third cut off to make it worth it, because you're going to be, if you're short, you're going to be wrong a little more than you're going to be wrong going long stocks generally. Stocks go down about 25% of the time. They go up about 75% of the time. So you've got to be a better trader. And you also have to be one with a lot more patience and pain threshold to hold through till the stocks turn. And that is problematic. A lot of people do not have the internal fortitude to stay short. And then stay short one of these stocks that's only going to move about $5. I like to short stocks that have that are extremely expensive. I like to do it with puts. And, you know, when you look at something, for me, if you're going to go short something, I look at things like Priceline, things that have already fallen, haven't been able to get back up to the previous highs. You know, this thing gets back upwards of $2,000 again on light volume. That's probably where I would think about pulling the trigger. If the wheels fall off, maybe so. But on this one, if you buy a put, out of the money put, you can, we've already gone from 1984 to under 1900. So you've had a $90 move, $95 move. To me, those are the ones that are more attractive and the ability to make more money. And also by buying puts, you can limit your losses significantly. The chance of a $3,000 or $2,000 stock going to $2,500 before you can blink, fairly rare. A $20 stock going to $40 the next day happens a great deal more. And that's always what you want to look at. So I don't like cheap stocks to go short, and I don't like trying to go long stocks that don't make much money in a world that you want to be making high margins on. To me, this year is going to be the biotechs. Since they did so poorly last year, you're looking for rotation in companies that can make a lot of money and spend that cash off. This thing's coming back. Can we find a low out here around 112? I think you could. We've got a little bit of bad news from the Amazon guys. That may be giving you your opportunity to come back at 113 or 112. A lot of buyouts in this sector, and of course that kind of ran this up to 119.30. But if you're going to make money, it's not probably going to be in low margin companies that have to borrow money as interest rates go higher. But you can give me a call at 877-927-6648. Vishay, the other one, VSH. Now this one's kind of interesting. A higher volume high. You've had a pullback. It's $22. I'd much rather go long a stock that had the ability to go higher. Let's go ahead and read their profile on this one, what these guys do, so I don't make a mistake on it. Manufacturer supplies discrete semiconductors and passive components in the United States and Asia. The company operates in 5 segments: MOSFETs, diodes, optoelectronic resistors, and inductors. So again, low margin products. They don't make 60, 70% margins like Intel. So the question would be, do you want to be in these stocks that have low margins? And I'm going to say you want to, especially this year, which could be range bound as we continue to see interest rates hike across the year. Do you want stocks that don't make much money as far margin? Do you want stocks that have a lot of cash sitting around? I think the answer is yes. And you want stocks that can have some margin increases or that have good margins already. So software companies, maybe you know, that are doing things a little bit better. Hardware companies that are making things that aren't commodities. I'll tell you about passive components. When you see that word, think commodity. It's sold by the pound, by the truckload, by all kinds of stuff. And discrete. Discrete means like an individual capacitor or individual transistor. You can make some money in it. It's not a bad business, but if you're going to make money in it, you're not going to be making high margins. So again, I'm just thinking that you probably want to be looking at stocks that have good margins, that are probably doing well. Stocks that didn't do well this year, last year, or maybe even the last 2 years, that are turning around and their margins are increasing, and that won't have to borrow a lot of money at higher rates, because those are going to be the kiss of death over the next couple of years as the Fed does raise rates. So thanks there. Hopefully that answers a lot of questions, at least about the way I'm thinking here. So what else do we have? Okay. NASDAQ's off 4 now. We have S&P's off 5. So we're down a little bit. Okay. Take a look here. Just keeping an eye on some of my positions. Everything's looking okay. Nothing to write home about. Nothing to see here. Okay. Anyway, earnings after the bell. We looked at that. When we actually look at some of those earnings coming up, when we have a minute here, we don't have much time left. Okay, so after the bell tonight, Facebook, let's take a quick look at that. I think this has a lot more to do with what they're going to say in the after the earnings announcement and in the earnings call. How much money are they willing to lose as they change some of the things that they do? This was a little higher earlier in the day. I suspect that some of the reticence in the market today is fear of Facebook coming out and saying that they're going to lose lots of money for years to come. We'll see. I don't think they're going to say anything that bad. When we come back, we'll look at Microsoft, Mr. Softy.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Microsoft after the bell tonight. What am I expecting? I'm expecting $100. This thing's been moving higher. Everything's been going well in the company. Don't expect any kind of big tax announcements or anything else from these guys. They're going to talk about how they're going to spend that money that they're going to repatriate. As long as they don't throw too much of it at buying other companies or anything else. Again, I'm not going to get too excited about the first print after the earnings calls in Facebook or Microsoft. It's going to be much more about what they're going to do and how they present that to investors. But my guess is if there's one that's got weakness, it's Facebook. And the question is how much weakness depends on how much they say they're going to give up or to correct some of the weaknesses of the original plan. And we've talked about in the past, other companies that have had the same kind of problems. The site that was, I'm just having a blank right at the moment. The site that has all the reviewers on it. What was it? That's got all the people that thought that they were restaurant critics, all the other stuff. Someone's got to tell me in the den. I'm just having a mental blank at the moment. Den. Now, don't have time. Yelp. Yeah, thanks. That's why these crazy company names just come back. Anyway, Facebook's got the same problem that Yelp did. All these kind of social media companies do. Question is, how much are they going to spend or lose to get it all fixed, and how is that going to make the company better in the long term? That's what everybody's going to be looking for that one. And the question is, how much? No one knows, and my guess is that it's going to be down a little or a lot, depending on that. Microsoft up a lot or a lot more after the bell. Looking for this thing to print 100 shortly after 4 o'clock today. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.